US futures are pretty flat. European futures look kind of mixed. But Asia's been weak as a result of selling of tech stocks, apart from Alibaba. There's a lot of mixed signals going into today's European session, I suppose, Morwenna.
Yeah, well, we are definitely seeing a bit of a rout there coming over from Friday with the AI stocks leading in the US. And we're seeing that coming through in Asia this morning as well. I think one of the things I've been looking at is that I think that's going to be quite good for the FTSE 100 because we saw them actually have a pretty rough week actually last week. But it's they outperformed European stocks. You know, they dropped 1.4%. That was their worst week since April, but it wasn't nearly as bad as what we saw in Europe and in the US. And actually, with this sort of flight from risk that we're seeing spread around with the uncertainty, the UK's kind of consumer-heavy, defensive-heavy stocks are likely to benefit more, as well as there's a big rise in gold. And a lot of that uncertainty that we're seeing, particularly from the US Fed, you know, what's happening with these tariff policies, helping precious metals, which again helps some of those FTSE 100 listed precious metal miners. So, you know, after a difficult week this week, I think things have really aligned for it to perhaps do a little bit better this week and perhaps return to that ascent we'd seen to consecutive record highs earlier.
We're just waiting for payrolls. Is that what we're doing all week?
There is certainly that uncertainty and that overhang, and actually things are also quite stagnant, I think. I think when you're looking at the fixed income market in particular, we've seen yields, particularly long-dated yields, really rising across the board. And so, I mean, you know, one of the things we've been talking about is France, you know, elevated political uncertainty there. But we're also seeing it in the gilt market because there's a lot of uncertainty about what's coming up in autumn's budget, but that's quite a way away. So there's generally a sense that a lot of these catalysts are a little further out. And of course, as you say, with the US, we're waiting for payrolls. There's so much uncertainty about what's happening with the Federal Reserve and, you know, also with tariff policies that I think everybody's kind of in wait-and-see mode. But at the same time, nothing's really alleviating that elevated risk profile.
Morwenna, we were just talking about how it's a long time to wait until the budget. It's a good 2 months, isn't it? Now, I mean, it might be roughly until we don't know the date exactly, I think. So we got 2 months of waiting to find out whether we get tax rises in the UK. It feels like the narrative can't just be that for 2 months.
No, absolutely. I think one of the things we'll be watching closely, though, is actually what the Bank of England does this month. You know, the prospects of them cutting rates has been significantly reduced, actually. They sounded a bit more hawkish in their last meeting. Markets are now pricing in less than a 30% chance of a rate cut. But whatever is going to help that bond market heightened risk, you know, could only really come from the Bank of England, because I think there's so much uncertainty with regards to what's in this budget. And actually, even though usually talks of tax cuts would be beneficial, perhaps, and reassure the bond market, I think when they seem so kind of wide-ranging, that's actually creating more anxiety just about the economic state that's faced by the government.
Well, great stuff. Thank you very much indeed.